morning, everyone. Thank you for showing up. I know some could think it's very early in the morning to attend an event and someone to talk about the markets. I'm Wael Makarem, Strategists team lead at exness, and I've been trading for 13 years. I do manual trading and I do algo trading. So I decided to talk to you today about algo trading a little because some people could think it's something new. We're all listening and hearing about stuff related to AI, and a lot of scammers, they're telling you we have these expert advisors or automated systems that they do run on AI, and you're gonna make millions out of them. And what I assure you that 99.9% of these, they're just full of, let's not say it. So first I'm gonna start to just have a little bit more interaction with you. So tell me, who of you is trading and how do you trade? Is it manual? Is it automated? Manual trading. So how do you take your decisions? How do you buy? How do you sell? What do you base your decisions on? Technical analysis. So manual trading, it all involves you as a human taking a decision. And this decision, as we know, it could lead to a loss or to a profit. So if you were right about your decision, you can make profit. If your decision was wrong, you're gonna have a loss. And we have, as a humans, we have a lot of factors that would affect our trading. And this is why majority of people, especially retailers, lose in trading. Because a lot of factors do affect our behavior, our decision making. So, as we mentioned, manual trading, it's taking decisions based on human judgment. So I just use technical analysis, fundamental analysis, some risk sentiment maybe, whatever. So there are a lot of approaches, but in the end, I am the one who's taking the decision. I'm executing my trade. I'm deciding on the volume, on the size, whatever. So this is what I'm doing. It's all about me, about my assessments, about my vision about the market. And these decisions, they could either lead to a win or a loss depending on how strong I am. What are the disadvantages? Some of you just list some disadvantages for human trading, for manual trading. Disadvantages. Psychological problems, so fear and greed. A lot of people, we hear a lot that we lose because of our emotions. A lot of people, they can't handle loss, so they can't handle even closing or admitting that they are losing, so they stick to their losing position and they hold it until the account is bust. So this is one of the things. Others, they would see, for example, I was shorting gold for a while now, and I've been seeing gold going down, and every time I see this a huge profit in my account, and then the market reverses a little, and then goes down my way, and then reverses a little. So it needs a lot of patience. Any trader would have maybe closed his position and went out. Because I was greedy, I made some more money, but also this greed could have led for me losing the profit that I saw in my account. So greed could be good, could be bad. Fear could be good, could be bad. So it's about how we are dealing with fear, how we are dealing with greed that would shape up my portfolio's performance. So a lot of disadvantages for manual trading, emotional bias, we talked about it. It's time consuming. We hear a lot of people, let's just put it roughly. At least like 98%, we call it 98% of people who trade FX, roughly speaking, they aren't doing FX only. So they have their own job, they have their own life commitments, and on the side, they do FX trading. And majority of people, they just say that their losses come because they don't have much time. They opened the trade and then they got busy with something and the market went against them. They couldn't follow up on their trade. So it's time consuming. You can't follow up all the time on your trade. Also, limited speed. You can't, as a humans, we can't, sometimes because we interact a lot, we have a lot of emotions, we can't deal immediately with something that's coming up in the market. Markets is all about rush, new things coming in. Every now and then, headlines, moving markets, whatever statements. Even someone who's just decided today to dump his holdings also could move the market. And as humans, sometimes we feel like we're glued to a chair. We can't move. We can't do any decision that could change our performance. So our speed is limited. Also, when we're executing the trade, if I did my assessment, I saw that the market could be moving. If I'm a day trader or I'm a scalper, I won't be as fast as the algo in executing my trade. So this is also one downside of manual trading. Subjectivity. If I show you today a chart, I could get different opinions on the chart. Some people would believe the market's going to go up. Some would believe the market's going to go down. Others would believe the market's going to stagnate for a while. So we have a lot of biases. Even if a lot of figures, they're showing that the market could be moving higher, but I have a certain bias, I'm just going to look for affirmative bias that's just going to confirm what I want from the market to perform. So also this is something that a lot of people can get off when we're talking about manual trading. Continue going on. Risk of burnout. How many of you who just take trading as their own thing to work on? They start trading in the morning, they do well in the European session, they're up big during the day, and then when the US session opens, they started shaking a little, and when the US session is going into the close, a lot of them, they would be left out with no money. I see you laughing because I believe we all passed through this. A lot of days I was up big in the morning, and then going to the end of the day, I was like, guys, what did I do? I was up a few percent, and then I started needing a little bit more, started having some headwinds, my portfolio started going down, having some losses, and then I wanted to make back these losses with definitely not a mindset similar to the one that I started my day with. I started my day fresh, I had no biases, no pressures, but at the end of the day, I was super pressured, so my decision-making process was harder and not as accurate as in the morning. It needed, if I'm a manual trader, if I'm a guy who's doing a manual trading, I can just do some forecast. Because I'm a strategist, it's my bread and butter to do market analysis. I'm keeping up with the markets every day, doing a lot of research, whatever. But you as a trader who have a lot of things to take care of during your day, you're not going to be able maybe to just do analysis on 5, 6 pairs. So what you're going to do is stick to 1 pair, 2 pairs. Maybe this is something right. A lot of people, they just trade gold. Some, they just focus on euro dollar. It's not bad to just focus on 1 pair and master it. But also, if you could scale up your potential, this is also something that's good and could turn into better performance. Also, if we're speaking about diversification, scalability could help in diversifying my exposure. So this is something very good to take into consideration. And as a human, I believe there's not much room to scale our performance. Also another one, skill and experience dependency. You've been hearing a lot of people talking since yesterday, and everyone was just like advising you, guys, you need to do technical analysis. You need to master fundamental analysis. You have to take care about your risks, all these. Maybe I'm someone who doesn't have anything to do with technical, anything to do with fundamental. I can't manage my own risks. What shall I do? Shall I quit trading? Is there any way to try to move it? So as a trader, I have to have a lot of skills maybe, or just build some skills, or put some more effort. And this also could not be easy for me to do manual trading. So since technology is just advancing more and more, and now we have access to a lot of resources, so it's now easier to jump into algorithmic trading. I bet a lot of you like would use MetaTrader 4 or MetaTrader 5 or even ZTrader or whatever trading platform that offers algo trading. They don't know that there is a strategy tester in these platforms, or even on TradingView, that you can run your strategy and backtest it for a period of time. So what is algorithmic trading? And is algorithmic trading able to help me to across all these disadvantages in manual trading? Who has done algorithmic trading? Who works with algorithms? What do you do? How's your experience? Is it good? Have you been surviving the market? 50-50? Cool. So as we started earlier, a lot of people, they are just exploring. I know my friend here, Rani, he's also a veteran in algorithmic trading, has a lot of resources, done through a lot of tests, tried hundreds of EAs, but also every day we're exploring something new, is learning something new. We have some things that are working, but also it doesn't mean if they're working today, it doesn't mean that they're going to work tomorrow. So all these, they change, and we have to adapt. But what is algorithmic trading? It's the process of putting a predefined set of rules where the computer or this program will execute the trades based on these rules. So for example, if I'm trading using RSI or using super trend or using moving averages, whatever, even like on the MetaTrader 4 or MetaTrader 5, you can find some built-in expert advisors that do run on these technical indicators. So it's something easy. This algorithm, instead of you just watching the RSI going below 30 or whatever, the algorithm would just do that. And when your predefined set of rules is valid, then the EA or the algo will execute your trade. Also, you can just use some sort of risk management, do all these with algorithmic trading. So as we mentioned, set of rules to execute, and let's get into trading the process from execution to monitoring. And one more good thing is optimization and strategy backtesting. So I'm gonna go over the advantages of algorithmic trading, but first we're gonna show some of the figures. Latest figures shows that in equities trading, around 60 to 73% of equities in the US are being traded using algos. In Europe, it's less, 60%, and in Asia, it's around 45%. However, this is picking up. We're getting forward with more awareness about algorithmic trading, about just doing automated systems in order to execute trades, whatever. It's getting a little bit older fashion of just me staying in front of the platform and try to execute trades. So automated advantages of algorithmic trading. It's an automated system, a set of rules. They can just execute these, based on these rules, we would be taking certain trades. So predefined set of rules and instructions to make trading decisions. Data analysis. So when I'm just running the algorithm, this algorithm can just have better data analysis than I do, because we said sometimes we have limited capacity on just assessing market analysis information. We can fit in the algorithm whatever we want, whether it's price, it's volume, it's some inputs from indicators, from external data. We can do whatever, and the algo is going to do all the assessment or the analysis that we need. Real-time monitoring. If I'm at work, I open the trade, I don't have certain set of rules, whatever, for risk management. I'm just a lazy trader, whatever. So when we're using algorithms, if something happens in the market and I'm doing manual trading, I might not be able to follow, and then I just open my platform and I see the market's against me with hundreds of pips, let's say, or whatever. But if I'm doing algorithmic trading, if there's predefined set of rules that are taking decisions on my behalf, if something happens in the market, the EA will immediately react to this, and it will close, for example, the trade or whatever, if my conditions have changed. So this is good when we're using algorithmic trading. Order execution, it's always executing the trades in a faster manner. Instead, for example, if I have a certain trade where if RSI crosses back above 30, then I would be buying, let's say. So the algorithm would just, if the number crosses above 30, closes above 30, let's say, it would just immediately execute a trade. I could lose a little bit of time by just doing this manually or just checking it manually. Risk management, it's very easy now to, when you're building your EA, there are a lot of inputs that you can just easy set whatever stop loss, take profit. And these, they can be either strict stop loss and take profit, or they can just be dynamic, whether you're using any indicators as trailing or whatever. So it's very easy to just set these orders that would help you in risk management. Backtesting and optimization is something that's really important. A lot of us just do random trading. I'm just gonna pick up a trade today because I heard some analysis, I did my analysis today, whatever. But when you do backtesting, instead of just, if I'm gonna do manual backtesting, I go on TradingView a lot of times just to check an indicator. I go back 3 months, 6 months, 9 months, whatever, just writing down every single trade that was possible. However, if I just code this strategy, which could take a few minutes to a few days, depending on how complex it is, and I just run it on a backtester, 20 years of data, tick data, 99.9% good data, and then I have all the statistics of this strategy. So I know if it works or it doesn't work. When it works, what shall I tweak, and all that. I'm gonna show you now how to do it. Reduce the emotional bias. So since there are certain predefined set of rules, I'm just gonna follow. A lot of people who do trend trading, they can't bear having profits in their account. They just wanna close their profits as soon as they see them. So I see a little bit of profits, I would just get out. A lot of losses, I'll stick to losses. And this is one of the big problems that traders have. However, if you have a predefined set of rules, if the market is going in a certain trend and the algorithm is a trend following advisor, then if the market is performing a trend, a direct trend, then my trades will be executed. However, if I'm doing this manually, oh no, gold has dropped too much. I shouldn't be taking a short position. Why? Maybe that's just the start of a new downtrend. Maybe the market's gonna fall more. And then, because of your bias, you're just losing the opportunity cost. You're using the opportunity. And this is increasing your opportunity cost. But when there's a certain predefined set of rules, you know the positives and the negatives of your strategy, you have all the statistics in front of you, you can perform based on that, and I assure you, you can have better performance than doing manual trading. Scalability and diversification. If I have a good strategy, I backtest it on tens of pairs, let's say. If it's working, it's gonna work on different pairs, let's say. It's very easy for me. I'm just gonna plug my EA on different charts and it's gonna execute the trades. But if I want to follow 5 pairs a day, I'm just gonna start flipping between each chart. I assure you I'm not gonna end up with good results. So when you're running EAs, everything is set there. It's doing just the execution. It's doing the monitoring for any updates in the market, and this is better performance. However, everything has disadvantages and advantages. So if we want to highlight on disadvantages, a lot of people would be afraid of running algorithms. However, disadvantages, a lot of technical failures if you don't know how to make sure that your code is robust. So sometimes you have bugs, whatever, it's not working, or sometimes you can open trades, whatever. This is very risky. So that's why you need to really run it on first, you have to do back tests to make sure the strategy is solid. And then you have to run forward testing on demo accounts. And when you're sure that there are no technical issues with it, then you can install it on your real account. And then, but also always you have to have certain risk checks in place. If anything wrong happens, just close everything, stop executing trades. So this is your safety button. Over optimization. You see over the internet a lot of people who are just scamming you. Guys, I have this EA that's gonna win 99% of the time. Yes, on a certain set of data. And if you don't know, I am just gonna share something with you. Back in 2016 when I started doing algorithmic trading. So I was just coding with a friend, and then I had this EA that was making so much money on backtesting. That's gonna be amazing. And then we noticed that on MT4 back then, the data was 90% accurate. This 10% difference, it made a huge difference with execution and whatever. But when I bought new data that's 99.9% tick data, I know that this EA is a total failure. So this is why it's very important to know which data are you using to do your backtests. And also there's a lot of overfitting and over-optimization. So come on, I'm just gonna, for example, a lot of people would do that. If I do moving average 200 on the daily chart on Dow Jones and I only take buy positions, I would make money. And if at a certain time I feel like, no, 200 is not working, it's fine, I'll assess it, I'll do 250. No, it's not the right thing. You're just doing overfitting and expecting that this could perform well in the future. And this is also not right. So a lot of people, they just do over-optimization. They change a lot the inputs of their EAs, algos, whatever, to fit into a certain range where they believe the EA could make money, and then they will end up losing money on real trading. Data sensitivity, so this is what I wanted to talk about. I combined the 2 points. So it's very important to know what data you're backtesting your EA on, and what data you are feeding your real algo. So you have to check latency, you have to check the price movements and all that. It's very important to have a look when you are running these. Loss of control. What do I mean by loss of control? A lot of you would just buy algos and they don't know how they execute trades. So if I'm buying an algo that does well in trends and I just run it on a sideways market, I'm just gonna end up losing. But I don't know because I didn't know how it executes trade. So I always advise, do not buy just random algos without having full knowledge on how it works. Or at least if the programmer didn't instruct that, or the one who's selling the EA, he didn't show you how it works, at least run back tests and try to understand it's making money on sideways, it's making money on trend markets, so I can do my analysis and then make sure when to run it. Another thing that I didn't add in these, it's very important. We're living in a time where social media is everything now. Everyone is on social media. Instagram, TikTok, Snapchat, whatever, you name it. And a lot of people, they just want to sell you stuff. Scammers, spammers, whatever you want. I would make money if I sell my EA. I don't care if you win or lose. I just want to sell my EA, make money. So always make sure to do your checks. Make sure to know what you are investing in. And if you even buy any algo, any EA, whatever, make sure that you run it for a while on a demo to at least know how it works. This would save you a lot of money. Case study, I'm going to show you, this is a backtest on a super trend. This is MT5, super trend indicator. It's running a backtest, a balance of 50,000, and the market is running. So I have certain set of rules, and based on these set of rules, the market is moving. So here I have this sell position. So the market, excuse me, can you make sure my phone is next, excuse me. Can you make sure my phone is next to the laptop so I can get hotspot? So if you can see here in front of you, it's just a normal chart. It's showing how the trades are open. So here you can see it's a buy trade. It was making some money, and then we had another trade. So opening and closing trades based on certain predefined set of rules. And you can see here the performance. It started with a balance of 50,000 to make a little bit of money, and then it goes on. So here, for example, the market was going down. I have certain trend filtrations. I didn't take these trades. And then the market started to move. I have certain time parameter, and then the market would only perform based on the set of rules that I had. I had a buy position here, and the market still held this buy position, and then the market started moving higher from this point. So based on these predefined set of rules, I had access to just backtest my strategy and see if my strategy works. And then after that, I can see what would happen here. There's this open position, how much money it's making, $5,000, and then it will close at a certain time when the rules of closing a trade are met. So for example, here I had the rules of closing the trade, and then it was closed, and then I flipped to a sell position. This is the chart of the balance and equity. What's good between MT5 and MT4 is that on MT5 you can see better something is called equity drawdown. And this is what you have to make sure when you're buying an EA. A lot of people will tell you, oh, my balance drawdown is 10%. Yes, if you don't have a stop loss. And of course, you could have just small balance drawdowns. But your equity drawdown is going to be massive because you're holding floating loss that's crazy. So always make sure to, when you're having your backtest, to have equity drawdown too. So this is showing me, I started with the $50,000. I made some money, 55,000, and the market went down. So my strategy was losing, and then my strategy ended up making a lot of money in 9 months, and then started moving sideways, starting losing a little towards the end of this year. So this data is accurate data from the 1st of 2022 until September, 10th of September 2023. So I can see just a normal super trend indicator that's available everywhere. I did some tweaks on it, I coded it, and then here it is. This is the performance. I saw it making a little bit of money, then losing money, then making much more money, then losing money. So this could mean that if we go for technical analysis, indicators that work in trending markets, they don't work in sideways, and the other way around. So I tried to smooth a little to make sure I'm getting out with good output, but it's not always the case because this output's going to be eroded with the filtration that I got. So what I have to make sure, oh fine, I'm using a super trend. It's good in trending markets. If I do my analysis and I know that the market's going to trend, then I run my algo, and I make sure to set some risk parameters in place. But I would also expect that if the market goes sideways and I don't have certain risk parameters, my EA would be losing. So this EA is showing you, if I started my EA here, it would have lost around $6,000. So this is the difference when we're talking about doing assessment. I ran my analysis on almost 2 years of data, and I saw if I executed the trades based on my predefined set of rules, this would be my performance. Again, also I have this full set of data. That's super important. We're all living in a world of data. Data is everything. If I would tell you, for example, I don't know what you are doing, some sort of action, you would do it in a way different than you do it if you know more data. So this would show me everything related to data. The history, quality, bars, whatever. Initial deposit 50,000, total net profit 14,000. My gross profit, gross loss. What was my drawdown? My balance drawdown was 25%. My equity drawdown was 33%. This is a difference of almost $5,000. So at the time, I was up on my EA, $28,000, which is around 60%. My drawdown was 33, which could be acceptable. Also, I can see, for example, profit factor. Profit percentage of profitable trades, it was 42%, which was amazing compared to the normal super trend, because normal super trend would show you 33% profit trades. Losing trades, also you can see it. However, my risk to reward was 1 to 1.7. This is what made the difference and showed that my EA could make money. So based on these set of data, I can decide whether my algo works or not. Plus, I can have more data. So I decided to run my algo just on these times from 9 till 2, because this is a peak time in volatility, let's say. It's running full days. I can see that on Thursday, I made more money than Monday, than Friday, or trades were executed more on Thursday rather than these. Month, I saw that in June, I made more money, or I had more entries. I had more entries compared to October, November, December. And also here at the bottom, I can see my P&L in hours. So here I made so much money, here I lost so much money. And weekdays, so Thursday was one of the bad days for me. So if I want to run my EA, when would I run my EA? I can see that it was making money on Tuesday, on Monday and on Tuesday, while it was losing on Wednesday, on a Thursday, and making so much money on Friday. So I would just turn it on Monday, Tuesday, and Friday. And I would skip Wednesday and Thursday. So by this filtration, I'm in a better place. Profit and loss by month, I believe no one has much patience to check these. But also, since I can see that in March I lost so much money, in April I made so much money, and also I believe here it was July I made so much money, I could just make sure the months that usually I have bad performance, I just turn it off. And this is all about seasonals. Who have been following the S&P, Dow Jones, NASDAQ, the drop in US equities in the past few days? It's seasonal. It's also related to some other fundamental factors, but also seasonality plays a good role. And if you have access to seasonality on your strategy, that would also put you in a better situation. Personal thoughts. Traders could use hybrid trading model. What's hybrid trading model? I'm a fundamentalist, and I have my strategy, technical analysis, based on technical analysis, whatever. I do my assessment. I assess monetary policies. If I see that there is a probability of a directional move because there are divergence in monetary policies, I would run an algorithm that would do well in trending markets. If I believe there is no divergence in policies like what we happened since the beginning of the year, and this is what triggered me to always say that this year, the beginning of the year, first 3 quarters, we're just going to have some sideways move in majors, except for the Japanese yen, and this is what happened. So if I was running an algo that does well on sideways markets, I would have made good money. Another thing, creating algos is not as hard as previously thought. Like previously, I want to create an algo, it's going to be very hard for me. But now, there are a lot of options. If you just go on MQL5, find a freelancer, give him a set of rules, he can create it for you. Very easy. Pay him money, he create the job, backtest it, it's on. Another one, drag and match. I want to, if the RSI is above this, then short. If the RSI is below that, then buy. So this is just a pure condition. So I can just drag and match my equation, my closes, and then also there are a lot of these systems. You can match it, EA Builder, whatever. Just match your conditions, and you're gonna left out with the EA. You're gonna get the code, and when you get the code, you just go to MQL5 meta editor, and then you just put it in, compile. If I have no errors, you can just run it. Also, there's a new way of doing this. A lot of people heard of you about ChatGPT doing algos. Also, this could be with a drag and match, whatever. There's also another set, engines, that you can just put your predefined set of rules, and it could create hundreds of strategies, thousands of strategies, 10,000s of strategies, whatever. All you can backtest, do whatever analysis you want on in a few minutes. So everything would be sorted in for you, and you can just have it easily than you all thought algorithmic trading is previously. Always be careful when it comes to risk management. Risk management is key in anything you do, so always monitor your risks. It's good to take risks sometimes because if you don't take risks, you're not going to make money. Those who don't take risks, stay away from risk. Come on, if you're just going to stay conservative, you're going to lose the times where really you have to make money in the markets. You have to take risks. It's not wrong, but measurable risks. Good risks compared to your risk profile. So this is what you have to keep an eye on. Another thing, frankly speaking, stay away from scammers, spammers, and those who just want to sell you whatever things that could really be bad for you. Make your due diligence, read a lot, check with good sources. Now, social media gave access to everyone to just say whatever, talk whatever, whether it's market analysis, whether it's selling products, whatever thing. If I have a shitty product and I come there and I do proper marketing, you're just going to feel... A lot of companies that are here, let's say here, a lot of companies. Everyone is marketing, doing all these ads, whatever. Come on. You've been here for 3 months, maybe. You have 5, 6 employees, and if you just see the picture from behind, oh, this is a massive company. So always, marketing is changing a lot of things. Always make sure to do your homework, do your assessment, research, everything. It's very important to do that. I believe this is it. If you have any questions, we'll be at booth number 1. This is a QR code. You can just access exness website from here. I would be happy to share my personal experience with trading, with algorithmic trading. I'll be there at booth number 1. Thank you all for attending. Sorry for not having questions, but because we're late on time. And thank you all for showing up. I wish you a very lovely day. And if you're trading, just be careful. Always make sure to stick to your risk management rules. And thank you again.